Hi, I welcome you today to this derivatives class. We have understood the concepts of derivatives. That's the basics of derivatives. Whatever was relevant. The derivatives is again is a vast subject. But here, what we will try to see is how exactly we are going to learn from practical screen. Right now, whatever you are seeing is actually screen from Zerodha. And now, for our understanding, what I have done is I have taken one stock and two index, Nifty and Bank Nifty. I have taken along with one stock, SBI, because even in our classes we used SBI for example. So similarly, so I'll be taking you through this as of now. The first is, at any given point of time, as you know, that this is the spot Nifty. This is the Nifty 50 and Sensex currently wherever it is trading at. And at any given point of time, there are three contracts which will be running. One is the current month, near month, and the far month, October, November, and December. As you can see here, the spot currently is 11,745, 45, 46. And as we can see, 11,748 is the current month, October futures. I'm recording this on 16th. We still have another 2 weeks to go for the contracts to close. We still have another 2 weeks for the contracts to close. But because of the market corrected about 2.5% the previous day, as you can see, there was a huge correction on the previous day. So that's why I think there is not much of a premium. As of now, I can see about 3.5 or 4 points premium in the October futures. But November futures is trading at 11,773. As you can see, there is a difference of about 25 to 30 points compared to the current stock price. And December futures is currently trading at 11,792, which is precisely about 45, 46 points premium. Now, this is also called as cost of carry. This is also called as the cost of carry. Or if the futures price is higher than the spot price, definitely it's called premium. Otherwise, it will be trading at discount. It will be trading at discount. Any trade or any value, if the futures value is less than the spot price, then it is being traded as discounts. Usually, we see when when it is bearish, when the entire environment is bearish or the mood is bearish, you will find sometimes futures trading in negative or below the spot price. Right now, there is enough premium. There is enough premium, as you can see. Right now, as you can see here, at any given point of time, there are three: October, November, and December futures. So we will also check the depth of the market. As we check the depth of the market, we will come to know the volume. Currently, it has traded about 59 lakhs 45,000 contracts today so far. And the open interest as of now stands at 1.14 crores. That's the open interest as of now. This is about the October contract. Similarly, let's try and watch what's happening with the November. We are exactly at the middle of the month. So I have another 15 days, 2 weeks for the current month contract and the entire next month. Now here, let's look at the volume. It's not much. It is just about 2 lakh. It is just about 2 lakhs of volume. And even the open interest is close to about 16 lakhs 8,000. Not much for a November. And I'm sure that you already know that December, obviously, it will be much less. It will, yes, definitely. The volume currently today, whatever is traded, is about 38,000, and the open interest is not even 2.3 lakhs as of now. Now, this is how the interest goes. This is how that's why maybe it is not liquid. Even the December futures will not be liquid. When I say, what do I mean by liquid? As you can see, the buyer is standing at 94, the seller is at 97. Uh, there is a huge difference. Similarly, in November, let us look at it. The buyer is at 78, 80. It's about 2 rupees, or 1.5 rupees, 2 rupees. And in case you see the depth here, as you can see, it's about 52, 25, and 53. It's about less than a rupee. Rupee or less than a rupee is the difference. So that is how currently the three contracts are here, as you can see. Similarly, as you can see for Nifty, we have three contracts open for Bank Nifty, which is the other index which is getting traded. That is the Bank Nifty. October, November, and December. Again, there will be a difference. It is trading at 23,354 for October and 23,385 plus about 22 for November contract, and 23,417, which is 50 plus 65, about 6465 rupees difference for the December contract. Let's again check the volume and open interest. Now we have already established that the current month has the maximum open interest, and the near month. Only when it is approaching expiry, the open interest will get built up in the next month contract. As you can see here, currently about 29 lakh contracts have traded so far today. That is today's volume, and the open interest is about 16 lakhs 79,000 is the open interest with the Bank Nifty October futures. So let's also check November, get an insight into it as we are checking. Uh, okay, total volume is about 90,000, and not much of a volume. It's just 1,23,000. And I'm sure that even when we're checking December, it doesn't not much of a significance. Now let's look at some of the active stocks. As I told you, there are about 141 stocks, 140 stocks to be precise, listed in stock exchange. 10 to 15 will have very good volume, very good volume. Rest of it, might not have attractive volume or enough depth. Here I would like to take, for the convenience sake, I would like to take uh, SPI. Before I even move to the lot size and the contract value, I would just like to highlight some of the things, like, even SBI, there will be 3 contracts available. That is, there will be October, November, December. Now I'll come back to the index and say how weekly options are also there. I'll definitely touch upon the weekly options also. But before that, let's try and understand this. Here again, as you can see about the volume, look at the volume. 2 crore 68 lakhs 17,000 is the volume so far with October futures. And look at the open interest. Let me just make it. It's about 9 crores 46 lakhs 68,000 is the open interest with the SBI October futures. Uh, that's the thing. So let's look at the what's the now. This is where we have understood there are at any given point of time 3 contracts available, except in case of Nifty and Bank Nifty, where weekly options are available. I'll separately take those weekly options. As of now, we will look at monthly futures contract, which is available right now. And what we need to understand next most important is the lot size. Like Nifty, like when we've already understood, when the lot was made, when it was created, when the contracts were created at a particular time, at that time the value was ascertained to be around 2 lakh should be the contract value, based on which the contract size or the lot size was made. The lot size was defined. It has grown. Many of the stocks have moved away from those prices, have been moving away, and then even index has moved, so that there are various contract value. Now let's look at Nifty as an example. Now if whenever I go and place an order to buy, now in this screen I get comprehensive details. Now I get comprehensive details. Now this is actually a lot size of 75. Currently it's available at 11,743, or as the price moving. The margin required for this is 1,43,598, as you can see. This is the current minimum margin requirement. Now mark to market is separate. And now if I have to buy this, which I want to hold it beyond today, that this is the margin. There is one option for MIS, or intraday margin. As you can see, suddenly there is a change. Now you can see that intraday margin has changed to 36,504. Remember, if you're taking this position at 320, your position is squared off. Irrespective of wherever the market is going, your position gets squared off. But if you're only looking at anything to do before 315, then it would make sense to go for an intraday. Or if you want to go for an overnight, as you can see, the margin is 1,43,000. Now, this screen here provides me comprehensive details. So how to place an order? Usually I place the limit order. I don't place market orders because you have no control. Sometimes even your broker will stop you from placing these market orders. Limit orders are always good. Just check where it is traded, and then you can go ahead and place the order. See, as long as you have a strong view about the market, if the market is moving up or down, no, you don't have to really negotiate or bargain with the prices. There is no point in buying 20 paise less or 40 paise less, because your focus should be on the movement. Your focus should be on is the volume coming in. is the market trading. So I really don't look at the price. I just buy. I don't put a market price, but I just buy at the running price once the buy triggers with whatever criteria I have set. Now, if I am sure that I'm only trading intraday, I do use intraday MIS, or if I'm taking it overnight, I should just have this kind of adequate, I should adequately have margin. Similarly, let's look at if I want to sell. Now we saw that when I wanted to buy, the margin is 143 as I could sell. Now I'm looking at selling. Look at that 143 223. That's the margin required. Then it's the same. Now only if I'm looking at an intraday, then obviously the margin changes. Now here, by click of this button, I can actually either make it buy or sell, or otherwise it's F1 for buying, F2 for selling. Otherwise, in simple terms, you always have these icons, buy, sell icons on your screen itself. Similarly, let us also check the contract value and other details of SPI. The SPI has a lot size of 3,000, which means every rupee uh, will be three multiplied by the lot size, which is 3,000 rupees. A rupee plus is 3,000 plus. A rupee minus is actually minus 3,000 rupees. Now, what is the margin that is required? It's 57,000. If I'm looking at 57,000 is actually an intraday because my system had already set for an intraday. Now, if I put it overnight, now this is the value. 2,03,000 is the margin required if I want to carry the position beyond 315 today, because out of 320 your broker squares of your trade irrespective of wherever your trade is, unless you change your position from intraday to overnight. You will have to square off there and actually take a fresh position here. Now this is how it works, whether I want to buy or whether I want to sell. This is how exactly it looks like. Uh, Now, what we have understood, Nifty is a lot size of 75, SBI is a lot size of 3,000. Similarly, let's try and understand what's the lot size of Bank Nifty, and also let us look at the margin requirement here. When I look at this, here it's about the margin is for overnight, it's 1,26,000 is the margin for overnight. For intraday, it takes a margin of about 28,000, close to about 29,000, and it is a lot size of 25. I should buy in the lot size multiples of 25. Every point change will have an impact of 25 rupees plus or minus on the market. This is about, this is about the basic trading screens and the various stocks and futures, various contracts available. Now, let's take a small dip in understanding, let's dip further and understand what are the various weekly contracts available. I'll just clear this space so that we have some space to add some of the stocks. So now, as we saw that in futures there are about 3 contracts available, and only in options, when it comes to options, we have weekly options. Here, for the example sake, I have given 2 examples here. Nifty 22nd, that is, it's closing on 22nd October, Thursday, and Bank Nifty 22nd October, Thursday, it's closing. Currently, when I look at the strike price, we will be covering strike price when we are covering the option. Currently, these 2 are the 2 options I've just added from Nifty and Bank Nifty. So further, we will take it in the next step.